this presentation has been a hot topic for region service centers and other finance councils and TASBO, just because TEA has started conducting their audits. And I'm sorry, I saw that, and that's like a really large picture of me, and that's what, so I'm not totally into myself, but it was cool the way PowerPoint did it. But I just saw it this morning. I'm like, that is a massive picture. But anyway, it's very interesting how TEA is already auditing ESSER funds. I have a client that's going through an ESSER 1 audit right now. And just to see the request list has been very helpful as well. And just to get you all ready and navigating through that and making sure that you understand all the moving parts of the ESSER funding and how to document it and how to really prepare yourself to defend how, I don't want to say defend, but support how you spent those funds and why you did it. So it's important that we're very well versed, you as CFOs, business managers, finance directors, in the FAQs, because when you are audited, you'll need to indicate why you spent the funds in the manner that you did and where you got your information from. I always like to start with the end in mind. And so in the end, right, their TEA is going to audit you if it's the Department of Education or any other regulatory body. They will start with your schedule of expenditures of federal awards. And they will look at that and make sure that the assistance listing number, formerly known as the CFDA number, is correct. The pass-through number is correct. You put the correct pass-through entity. The NOGA ID is proper as well, because they're taking that information on the CFA and comparing it to their records, and they're trying to reconcile back to that. So they don't see that they have record of showing that they funded you certain amounts, but it's not reflected on your CFA, then that would be an issue for them. Or if it's a significantly different amount, that will also pose an issue. So the 5-digit number, as we know, the ALN has become critical to our single audits, to our school districts, charter schools. This year, more than ever, we started feeling the pains of getting the reporting right last year, but this year has been a little bit more difficult. And I remember from 2009, if you all were working in this arena in 2009 under President Obama's ARA funding, I don't remember it being this wild. And again, this pandemic is like no other. And so, of course, everything else has to be crazy, including accounting. But once you hit, if you haven't hit that $750,000 threshold in the past, I'm sure with the CRF and the ESSER funding, you have finally made yourself subject to the Single Audit Act by spending more than $750,000 in 1 year when you aggregate all of your federal funds. And so making sure we have the correct federal agency is imperative, because if we just compare CRF, the Coronavirus Relief Fund, to where that money came from, what federal agency it came from, to say ESSER, it's very different, because our CRF funding, even though the Texas Education Agency was passing through the money, it came from the U.S. Department of Treasury, which starts with a 21, versus our normal Department of Education, which starts with an 84. So this is the year where we really where it really matters, and we're going to be seeing a lot of different ALNs that we hadn't seen in the past. And of course, with the PRF, the Provider Relief Fund, that came from the U.S. Department of Health and Human Services. So what we've learned so far is that things change. We have to pivot. We have to be quick on our feet and make journal entries, decipher the information. And the best example is when we thought that, say, PPRP, the Prior Purchase Reimbursement Program, we thought that it was going to come and we were going to code it in Fund 277, and TEA was going to reflect that on the TEA payment report. But surprise, they used their own ESSER 1 or ESSER 2 allocations to pay the PPRP. And so then we had to pivot and say, okay, we're not going to record it in Fund 277. We're going to record it in Fund 266 or 281. or you might have been one of the earlier districts or charter schools that got your money, your CRF money or PPRP through Fund 277. So there was, it's a moot point, nothing to worry about there. But this is where we had to worry for those that got it through a different tranche of money. It's important to note that we use the correct fund, that we put it in the right fund, and that we use the correct CFDA number or ALN. Excuse me, I still old habits die hard. That we use that correctly, and making sure that we understand, or you understand as CFOs, that whatever they use, when you see PPRP being paid out of ESSER 1 or ESSER 2, it's not your allocation, it's TEA's pot of money that they've used that. So I don't want you all to reduce, let's say that you get a PPRP reimbursement of 2 million, you don't reduce your own ESSER 2 amount by the 2 million. That's completely different. So right now we need to make sure that we clearly identify ESSER 1, 2, and 3. ESSER 1 and 2 will use the same ALN as 425D, and the letters do matter because if you've ever worked in community colleges or universities, they're using the same 84425, but they've got other letters for E, F, G, M, because their HERF money is for the higher ed portion, but still coming through the Department of Education for this emergency fund here, emergency funds. So it's important that we use the right letter. X is going to be assigned to ESSER 3, so we need to make sure we include that. Make sure that you put the proper description of the grant. So in speaking with TEA, they will be looking to see the difference between like the ESSER 2 PPRP and the regular ESSER 2 that's through your allocation. So making sure that that's clearly denoted on your CFA. So it doesn't stop there, right? We just don't do the CFA, submit it to the Texas Education Agency, call it a day, and be done with it. We have to make sure that it's correct, because then the last step is that your audit goes to the Federal Audit Clearinghouse as you're reporting it to the data collection form. So they have their own rules, and so it's, review what's required for the data collection form and make sure as you're preparing the CFA or your auditors are preparing the CFA that you have all the critical components included in the CFA. And one of the things is making sure that we have the right cluster total on the face, and the last bullet point, make sure that it reconciles back to the financial statements. I like TEA's templates, financial statement templates, because we know that the 5900s has to be, if you're able to reconcile that to the CFA, you're good. We know that we're going to back out certain items that are coded to the 5900, like say E-rate or SHARs. Those are coded to 5931 and 5919 or 49, but they don't belong on the CFA. So we know that if you've reconciled it to the financial statements, you should be okay. When you're reporting and completing the data collection form, your auditors will do this. Most auditors will do this for you, but they will send it to you for review. So make sure that column C properly reflects the COVID-19 designation when you have federal funds. The U.S. Department of Education issued additional guidance probably 2 months ago, and it came through the community colleges. And so my community college client sent it to me, but you'll notice that it just isn't for 84425 pertaining to community colleges, because they also reference 84010, which is Title I, right? And so what they want us to do is that if you have an alpha character within your ALN, that you repeat the whole ALN in column C. And so you'll see it highlighted here in yellow. And so for the 84425, you're not just going to have the ALN 84425D for school districts, you're also going to include COVID-19 as well. So making sure that we do that. So we know we have the 3 pots of money. For all 3, pre-award costs are allowed, and that's going to be critical, especially for accounting for ESSER 2. I've gotten a lot of feedback where I haven't allowed some clients, not that I haven't allowed, but we said, if you don't have a NOGA, you cannot recognize the revenue. So they think, but we have pre-award costs. Yes. And you can go back all the way to March 13, 2020 and claim those for reimbursement. But the critical thing, the NOGA, when you get the NOGA is when you can start drawing down, one, and two, recognizing the revenue. And towards the end of the presentation, I'll have an example that'll make it a little bit clearer. For ESSER 1, we know that it supplanted our state aid. So it was basically like our general fund money. And so we did huge reclasses. For ESSER 2, it's going to be split. We're going to have part of it is going to be supplanting state aid. And that's the ESSER reductions for the hold harmless piece that Josh Haney was discussing earlier this morning. And so it's critical that we separate the hold harmless ESSER 2 portion from the non-hold harmless ESSER 2 portion, because the supplanted portion is not subject to the TRS federal contribution if you're going to use it for payroll. The supplemental portion is subject to the TRS federal contribution. So just be careful with that. Make sure you have a mechanism to track that so that when you do your reporting to TRS, you're not overpaying or worst case underpaying. And then you have the ARPA or ESSER 3. It's 100% considered supplemental. So all of it is subject to the TRS federal contribution. We know on the use of funds, we have, when you look at the ESSER 3 application, I mean, you're pushing over 20 allowable uses. So as we move from ESSER 1 to ESSER 3, the uses become more detailed, and it gives us more ideas on how to use the funds, and also because ESSER 2 was double of ESSER 1 and so forth and so on with ESSER 3. The biggest difference that we've heard over and over is that ESSER 3 has a 20% reservation requirement for learning loss. Whereas ESSER 2, it was, you need to make sure that you're using the funds to address the learning loss, but they never gave us a certain percentage like they did with ESSER 3. So you need to make sure that that's, obviously in your application, but that you hold true to that application, to that budget, and that you properly are tracking that 20% learning loss reservation. You can go over the 20%, but it's a minimum amount, at least 20%. Equitable services, we only saw this with ESSER 1, where we had to extend the ESSER funds to our private schools. But with ESSER 2 and ESSER 3, there's no equitable services requirement, because with those two acts under CRRSA and ARPA, they provided private schools with their own funding, emergency funding. So LEAs, governmental entities were not required to provide those services. So we're off the hook there. Maintenance of effort, it doesn't mean that we can just throw caution to the wind and forget about MOE. It's just saying that there isn't a particular maintenance of effort requirement attributable to the ESSER funds like there is to the ESSA funds, Title I, Title II, Title III, etc. It still says that you need to be careful, especially as we're reclassifying, right? As we're reclassifying from the general fund in 2020 and 21 into these new federal funds, we need to make sure that you're still maintaining effort on all fronts. It'll also affect your Idea B maintenance of effort as well. And then a new concept is maintenance of equity. So that is only applicable to ESSER 3 under the ARPA Act, and it will be applicable this year, fiscal year 22, and the next year for 2023. Guidance was pending in this chart. This is a chart that I took from TEA, but in the next slides, they finally issued guidance this month, I think like a week or two ago. So I was very excited that they did that, because I was interested to see how districts were supposed to do that to make sure that they maintained equity as they were spending these funds. So I alluded to this earlier in the charts. Again, supplement, not supplant, is not applicable. Maintenance of effort, we have to be very cognizant as we're making these reclassifications. But because there is no supplement, not supplant, we're allowed to use the unrestricted indirect cost rate for your ESSER funds. If for example, like the Title I, Title II funds were restricted to the restricted rate, which is a lot smaller than the unrestricted indirect cost rate. So just be aware of that. This is just more of your of the FAQs, talking about when you're moving salaries. The only thing that I'll say here is that make sure that if you're going to do everything by reclass, you can do it in a very summarized fashion from 199 to 281 or 282, whatever the case may be. But make sure that you have the underlying support, the payroll journals that gave rise to this journal entry, because TEA will dig down. Your external auditors are required to dig down, and you're required to reconcile those journals into to this journal entry. So the period of performance with carryover, you'll see that with ESSER 1, you have to the end of 22, September 30th, 22 to spend it, 23 for ESSER 2, and September 30th, 2024. You have your liquidation or closeout period, 90 days. So ESSER 1 was only 60 days, but we got up to 90 days. Pre-award costs, like I indicated, are allowed in all instances. So again, we'll go through an example to make it clearer here. When can you obligate the funds? You cannot obligate the funds until the later of that period of performance. So most period of performance is 7/1. For example, for the ESSER 2, it probably shows 7/1/2020 through whatever date, right? But when was your NOGA received, the approved NOGA? That is when you can start obligating, except for pre-award cost, right? An obligation, depending on the type of service or goods provided or purchased or procured, gives rise to the obligation. So that's very important. So you don't want to, even though you might have paid for goods or services, let's say March 15th of 2020, but you obligated the district prior to that, you cannot charge that to the ESSER fund. So when did you issue the purchase order and the vendor agree to it? When were the services provided by personnel? And I will tell you that TEA does look at that with a fine-tooth comb. I mean, they questioned about $3,000. One of my clients, they did a desk review, and they were looking at when the pay period started and when they charged the grant, regardless of ESSER or Title I IDEA B. They're really looking at that. So that really matters. And just be careful in general, because sometimes we get so comfortable with the recurring grants like Title I and IDEA B, but they will be looking at what grant period you charge certain expenditures to and making sure you didn't obligate too soon. So revenue recognition can occur once your NOGA is received. So again, when it's that approved at the bottom right, when TEA approved it, that's when you can start recognizing revenue. It doesn't mean that your expenditures become eligible from the NOGA approved date. It just means revenue recognition is affected. So for ESSER 1, you could start recording that as early as 2020 because state aid was supplanted. So we really didn't need to wait for the NOGA. It was our money to begin with. ESSER 2, again, you have the hold harmless portion. That's our money. It was owed to us anyway. It's the supplemental portion that you can't claim in 21 unless you have the NOGA. So 630 year ends, I didn't see any 630s, and this was just in the Houston DFW area. For our clients, we didn't see any ESSER 2 applications approved by 630. Some were submitted by the district to TEA by 630, but they were not approved until like 2-3 weeks after fiscal year end. August 31st, this is not going to be as a big of an issue for you because most districts were getting their ESSER 2 NOGAs by mid July. So most of you should have your ESSER 2 by 8/31. If not, again, we'll go through that example. And then ESSER 3, it's 100% supplemental. So there is no choice but to wait for that approved NOGA for you to start recognizing the revenue and the corresponding receivable if necessary. So budget amendments for each of the tranches of money, you have until July 5th, 2024. for ESSER 3. So when you create the special revenue budget, make sure you pay attention to the object codes. They do matter. I know for financial statement purposes, we really focus in on the function because that's the level that you're reporting on your financial statements. But for the object code, it's really critical that you stick to that and that you understand what's being coded to the 6300s. The main reason too is because you don't want to get caught in a situation where you budgeted for 6300s, but you really needed a piece of capital equipment, and well, you didn't budget for it and you didn't get pre-approval, so you stick it into 6300. So you as CFOs, business managers, and finance directors, I would query your 6300s for all these federal funds, especially ESSER, and make sure that there's no capital outlay erroneously coded to the 6300. If you do find that, you need to get approval. Now, notice it is prior approval from TEA, not after the fact. So you may get a question cost by your auditor or TEA in the case of a desk review. Make sure that if you don't have this link will give you when to amend the budget. It's very handy. I like it because it gives you a lot of guidelines with different scenarios to help you do that. Yeah, and so I've already talked about that. The important thing here, line item number 1, is indirect costs are not required to be budgeted in the grant application in order to be charged to the grant. So don't submit an amendment solely for the purpose of budgeting indirect cost. But again, make sure that you do you do amend the budget for capital outlay if you find that you need to use your ESSER monies or for any grant really capital outlay. The rules are the same, even for child nutrition, right? We don't have a normal NOGA or grant application for child nutrition, but you do have to go through the TX-UNPS system to get any capital outlay pre-approved. I included this chart. I won't read it to you, but it tells you when you need to amend the budget, and ESSER is a formula funded grant. So that column would apply to your ESSER budget as you're reviewing the expenditures. And it's okay if you have to amend the budget. There's a lot of pivoting going on, especially we didn't know what was going to happen with the ESSER 2. And so people said, you know what, I don't want to use, ESSER 2 for supplies. I want to use it for payroll because I don't have to pay into TRS for that hold harmless piece. And so how can I maximize the use of these funds? And so it's all right if you have to go back and amend your budget. Just amend it prior to obligating those funds. And so you'll see here on number 11, add a new item or increase the quantity of capital outlay, those have to be, the application does have to be amended. Liquidations is when you actually have sent off the wire, the ACH, or the check to the vendor. The expenditure is not in the sense that we book an accounts payable, credit it, and then debit the expenditure. In this instance, the expenditure is the actual outflow of the cash. So those liquidations have to be done within 90 days of incurring these expenditures. So we need to make sure that that's adhered to. So allowable activities per the grant. So for ESSER 3, you have your use of funds plan that you had to place on the TEA website. I will say that, probably Region 1 has done this already, but you will see that that TEA will start sampling districts and looking at their web postings for all the ESSER 3 requirements. So make sure that you work with your region service center, Region 1, to see if all the postings are correct. In Region 4, Region 19, I received calls that those districts, some of them are not fully complying because they did a mock audit. So it'd be a good thing to go back to your websites, make sure that it's in English and in Spanish, and all of the ADA requirements are met as well. So make sure you review the grant applications requirements. So just because even if we're supplanting, right, if our ESSER funds are supplanting state aid, like it happened with ESSER 1 and a portion of ESSER 2, we need to make sure that they're still allowable, that they're running through the same internal control procedures. We cannot be lax with these federal funds. The only difference with ESSER is that we just have more latitude on how we use it, except for, of course, that 20% learning loss reservation or reserve that we had to make for that. So making sure that everything that you do is consistent with your policies and procedures, and that you have policies and procedures, internal controls. Because I just got off the phone this morning with a client that indicated that TEA really wanted, as a result of a desk review, they really wanted personnel action forms. They want to see what funding source. So this particular entity already did the semi-annual certifications. They did an after the fact review. Everyone under the sun signed off. It was appropriate, but it was the initial, what do you have in place? And this entity also had signed job descriptions, very detailed, but they also wanted the personnel action forms that indicated that a federal program director had signed off, that everyone, as direct supervisor, had approved the funding code, et cetera. So just having, even if it's HR, that's fine, but I think you'd be hard pressed to prove that someone in HR knows exactly what someone in the special ed department is doing, or who they are, or they should even be charged to that grant. And it also helps as you're transferring people in and out of federal programs. The unallowable cost, if you go to this link, it on pages 14 through 16, it provides you for the absolute deal breaker items. Now I always go back to no lobbying, no alcohol, anything that looks like fun, entertainment. I'm joking, it can be fun, but anything that's looks and smells like entertainment will probably be disallowed. So be very careful with that. No gift certificates, amusement park passes, etc. So just be very careful that you read those pages and that the lines aren't blurred as you're using your ESSER funds, because those are just general cost principles that apply to any federal fund. So we have to be very careful on how we used it. You know, if you want to have another cheat sheet, you can look up in the compliance supplement by that ALN 84425 what the allowable uses are. But, you know, again, the U.S. Department of Education and TEA have provided so many FAQs to help us understand that. And even the grant application gives you so much information on what are the allowable uses. So I think if you stick to that, you should be fine. But the second portion of that is, do you have the internal controls in place to ensure that you stick to these allowable activities and that there's a review and approval happening as you're expending the money. More general cost principles are located here. I will tell you that TEA will use this and they'll reference these portions of 2 CFR or EDGAR. And so just be very familiar with what you can and cannot do with these items. So I alluded to internal controls, and they're very important just because in every instance, and when you look at 2 CFR 200, one of the first line items, the definition is this: the non-federal entity, you all, the local education agency, must have internal controls to prevent non-compliance. So we need to make sure that you're following your written procedures, that you don't deviate. And especially, you never want to be more lax with your procedures with federal funds than you are with your local funds. You'll get into some trouble with that. But even as simple as making sure that your purchase order is dated prior to the invoice date. So working with your vendors that they're not invoicing you, even when the services have not been performed, they didn't even give you a chance to issue the PO. And there's certain circumstances where that does happen, but making sure that you're looking through that through those purchase orders. And make sure that the transaction occurred during the fiscal year, even within the period of performance that's shown on your grant application and your notice of grant award or your NOGA, and that the purchase order was approved. If it needs to go through the workflow for a federal program person, and that's one of the critical things. especially for ESSER 3, if you have someone that's in charge of ESSER and they're the program director for ESSER 3, make sure that there's a review and approval process for that. For ESSER 1 and ESSER 2, for ESSER 2, only the hold harmless piece, make sure that you document and you write a memo. I had to do that for one of my clients because the way the Texas Education Agency was auditing ESSER 1, it was as if it was a true federal program versus we just reclassed from 199 and it was really our state aid money. What you have to do is document what controls are in place and you have it ready so that when you're asked by TEA, because you will be audited, these are the controls that we subjected all of these ESSER 1 transactions to, and it's no different than any other transaction, any other control that we subjected a general fund transaction to, whether it's payroll or non-payroll. That's important. So they had to write it up so that they could respond to TEA. Now, TEA is probably following a federal program, audit program. So they're asking questions that sound like they're auditing a true federal grant for ESSER 1, but you still have to be prepared. That's why I was saying at the beginning, we need to make sure that you have internal controls documented. The call that I was on earlier, they said, well, we just got written up. I said, well, they said, can you help us with developing forms, et cetera? And so I said, okay, before we do that, tell me what your process is to approve it, because surely you have an approval process. We do. So we went through it. I'm like, that's perfect. Just document it, put it on a form. So what you need to be thinking of as CFOs, business managers, finance directors, is what is the process, and everything that you do, all the approval process, whether it's through email or phone calls, those need to be memorialized in a formal document placed in your files, because it's not going to pass the test when TEA says, did you approve? Yes, we did. We did it via phone call. They call me and I approve it and I give them approval. And that's great because it happened, but they don't know because they weren't here. They weren't on the other line. So make sure you're documenting that. So go back to your districts today, over the weekend, think about all those procedures that is just word of mouth or it's very informal. Start to formalize those approval process and communications, because it will be critical for you during an audit. In the personnel file, make sure that you have, approved pay information and that you're referencing the compensation plan. They will ask you for that. Make sure that you know what the controls are, who is able to, even segregation of duties, that you know what's supposed to happen and that it's documented and that you share that with TEA. Now, I will tell you, you may have to dust off some internal control procedures, review them closely, because if it doesn't match up with the actual procedures, not that your actual procedures are wrong, but it may not be what's actually written. So you need to make sure that those two agree with what you're actually doing day to day and what's written. So, because what's going to happen is TEA is going to audit you based on what's written. And then if it's not written, you're just going to get written up. Okay, so make sure that it's written, it's meeting the federal requirements, and that your employees and you are following what's actually written. And also make sure that you're aware of who's able to approve the pay and that it's documented on there. Now, we know that in the FAQs, it says that time and effort is not required unless there's a split between the ESSER funds. I will say this, though, make sure that you have a control and document how you determined, let's say that you have 50 teachers that you're going to move into your ESSER funds. Well, how did you determine that? Make sure you have job descriptions. If you're coding them directly and not reclassifying it, so you don't need the payroll journals necessarily to support the journal entry, make sure that you have a rationale why you coded certain employees into Fund 282 or 281 or even 266. Job descriptions, make sure that they're handy, because they will be asking for that. They'll ask for salary authorizations. And then if you did have any split funded items, make sure that those were in place. ESSER 1 and ESSER 2 for the hold harmless piece, it's not going to be that big of an issue. As far as semi-annuals, actually, one of my partners here at the firm, we've been discussing ESSER 3, since it is a true grant, And in the FAQ, it says time and effort records are not required unless they're split funded. That's fine. But I'm just wondering if they're not going to come back and ask for semi-annuals. I hope not. So my advice to you and my advice to my clients is make sure in that justification for use of funds, somewhere documented how you determined that you were going to reclassify these 50 teachers, and have all of these items ready to go to support that. Because like I said, in the audit that is ongoing right now with one of my clients for ESSER 1, they're asking for all of these things, and that was supplanted, right? So how much more is going to be asked for with ESSER 3? And it's so much money with ESSER 3 that really we're just stuck with using it for payroll unless you go the construction route, but we'll go through that here. Here's the justification form. They will ask for that. It's a good practice to get into that, because every time you use it, it helps you document it, you know, versus you all having, you know, discussions with top management cabinet members on how do you want to use the ESSER funds. If you're not taking minutes or whatever, it gets lost. You don't document how you came to the conclusion why that particular use was allowable and met the intent of the grant and is in line with the use of funds plan that you posted on your website. When you start talking about equipment, again, make sure that, of course, even before you obligate the grant for any capital item, capital outlay, a 6,600, make sure that anything that you do purchase and you're going to use in the ESSER funds, so you'll probably get audited in 2024, maybe 2025, or maybe early on, and you purchased equipment, they're going to want to see that you did a physical inventory at least once every 2 years. So that's required. Make sure that they're safeguarded, that you can document that there's controls over it, that you're tracking it. And the main reason too is obviously they don't want you to lose it or for it to get damaged, but also if you dispose of it and it has a fair market value greater than $5,000, any proceeds that you get has to be returned to the Texas Education Agency for that. But what they're really going to be looking for is how are you safeguarding these assets? How are you tracking them? So whatever you're doing for your other federal funds to track them and safeguard them and identify them as federally funded, make sure that your ESSER funds follow suit as well. And I mentioned this already, but on the second bullet point, closely review your 6399s and your 6249s. It happens, it's not intentional, but we freak out because we realize that, oh my goodness, the special ed department went in and purchased a much needed piece of equipment. It really should be to 6,600, but when I compare my grant application, there's nothing in the budget. So we stick it in 6399 so that hopefully nobody catches it in there. However, if TEA comes in, your external auditors go in and they find a capital item, it will be questioned. You'll have to return the money. It may be too late. So while the grant is still ongoing and you're reviewing it, you know, find a substitute, move that 6,600 out of there because it's too late now. It has to be pre-approved because they will compare when TEA approved the capital outlay and when you obligated that grant. Technology items also have to be approved in the application. This was also in the request list from TEA to my client. So make sure that they're also inventoried. I mean, I just got an email from one of my partners, got an email from his client saying, okay, we're going to purchase almost $20 million of laptops. Okay, well, that's a lot of money. So how are you going to track them? Are you going to tag them? How are you going to safeguard them? And what's your policies and procedures? So they did ask for that in the PBC list, and it's also in the general grant provisions that TEA has. And so that's a snippet from that portion of the handbook. You'll notice the bullet point, you do have to provide TEA with all inventory control records when they request it, and that was requested for our client. When you start requesting reimbursement, make sure that you have supporting documentation, that the general ledger supports what you're drawing down, and that you've actually made payment, right? There's no more, let's just draw it down and in 3 days we'll cut the checks or process the ACH. You actually have to have paid those vendors before you request reimbursement, because they will be looking at that. It's part of reporting and cash management. But the critical thing is that there's always supporting documentation, and that someone is reviewing and approving these reimbursements. So I know you all digitally certify, you get into the ER system for TEA and you certify, but what are you doing outside of the system before you go into the TEA system to certify? You have to make sure that there's supporting documentation, review, and approval. And this is where I've already mentioned this, that make sure you pay the vendors before you actually do the drawdown. The good news about this is a lot of you were worried that, oh my gosh, I'm going to have to spend, millions of dollars with ESSER 3 for, just to spend it. But what will happen when I start supplanting what I was already going to spend with 199, especially in these state allotments like your comp ed or your bilingual ed or early ed allotments? Those are, your early ed allotments, so new, and many of you are struggling to spend that. Now we're going to have to probably remove some existing expenditures and move it to 281, or find new purposes. If you do find new purposes, you can combine 266, 281, and 282 for program intent code spending requirement compliance. So make sure that you're keeping track of that and that you're cognizant of it. So you might have some learning loss expenditures that you're incurring in Fund 282, but if you really look at it closely, it follows the comp ed requirements, and you're able to code it to program intent code 30, etc. Then you can combine it with your Fund 199, or in the case of a charter school, you would combine it with Fund 420. So that's great news, and it's in FAQ audit section Q7 for your reference. Again, maintenance of effort, you have your ESSA and your IDEA MOE requirements. So as you're moving, pick 23. This is where it really will hurt you if you're moving program intent code 23 for special ed or 33 into these COVID funds. Look to see what's left in 199, because for MOE purposes, you cannot combine your ESSER funds with your 199, only for spending, but not for MOE. And then this is the ESSA MOE. When we go out and do our audits, a lot of districts forget about this, but there is a template. Make sure you download it, that you're monitoring it at least quarterly. I would suggest monthly if you have the time. But the difference here is that the MOE for your ESSA grants is that you have to spend at least 90% of what you spent in the prior year. And for your IDEA B compliance, you have to spend the same amount that you spent last year. So it's a little bit tougher, but you can get pretty creative, strategic. I don't know if we have time to be strategic, right? Everything's moving so quickly, but once you meet your IDEA MOE compliance, move things over to your ESSER. Just make sure that nothing hurts the current year expenditures when you compare it to the last year that you were compliant. So we won't get into that because IDEA B MOE is a whole topic in itself. We move into construction cost, and before I start with that, okay, there is a question 6600s. It says, as I understand the FAQ, only pre-approval for construction only, not necessarily 6600 equipment. Do we need pre-approval for 5K equipment not linked to construction? The answer is yes. Anytime you have capital outlay, the FAQ may say construction, but in the application, you must get it pre-approved. Per 2 CFR, I don't know I think it's in the 300s. I'll have to look at it and I'll send it out, but you have to get it pre-approved. It's just like your title programs, IDEA B, anytime you have capital outlay, 5,000 and over, it has to be pre-approved. Another question, if the district decides to charge a fee for damaged Chromebooks purchased out of ESSER funds, where would the fee be posted. To be fair, you could charge it back to the ESSER funds if you wanted to, as a local revenue. You could do that. I haven't seen anything. You could treat it as, it's not truly program income, because I don't think there's anything that's required there. But I'll have to look at that. But to be safe, if I were in your shoes, just to remove any scrutiny from my district or charter school, I would put it back in that ESSER fund, because it is federally funded items. So if anyone has a different response, please let me know. Can you show the previous slide?
Selena,
Yes,
this is Romalda, and Corey Green came to the service center in the summer, and I, along with other districts from Region 1, reached out to Corey about that specific question. And basically the feedback that we receive, and correct me if I'm wrong, Jaime from La Jolla, it's that it would be best that we don't charge the fee. But if we do charge the fee, we have to reduce it from the allocation. Okay,
yes. And so that's perfect. So that's in line. I would put it back in that. You don't want to keep it in 199, because that's kind of double dipping. You're charging a fee for something that you use federal funds. So thank you for that, Romalda. I agree with that. I think that's the most conservative. Okay, construction costs. So construction cost, I'll tell you, in the last 2-3 months, we've been going back and forth, working with my clients' attorneys. And I'm glad for the attorneys, because if you don't have a school district, a well-versed school district attorney, when it comes to construction and procurement that can review all of that, I would definitely suggest that you do that, just because it is a fine line when something is construction and when it is just repairs and maintenance. And, HVAC can be either. It just depends on the volume. It depends on what you're actually doing. If it's like for like replacement, then it's not construction. However, even minor construction will fall under the construction category, and there's various things that you have to do. And K through 12 is very lucky, because you can actually use your education stabilization funds, your ESSER funds, for construction, where higher ed cannot. They are not allowed to use it for construction at all. So again, construction must be approved. The reason I say that, you have to know the difference. You can't default to repairs and maintenance because you could get in trouble. Because if it's truly construction, and it's not David Bacon, excuse me, it's Davis Bacon. I just saw that. I'm like, why did I type that? It's Davis Bacon, has to be followed. And so you have to make sure that the contractors are paying their laborers at the prevailing wage rates issued by the federal government. Then you have bonding requirements. So looking at your HVAC replacements or repairs is going to be key. A lot of you are doing ventilation projects. Some of you are doing other things that, like toilet replacements. Some things have been approved. It's in the application. But again, making sure that you know what is construction, what is repairs, because there's a lot of different things that go into it, and a lot of things that have to be placed in the contract. Then you bring in a whole other set of issues for procurement. Is it construction? Do you follow 2269 of the government code, or do you just go? Do you do something different? Some individuals or entities want to use JOCs. You got to be very careful with JOCs, job order contracting, making sure that the pricing is available. In short, if I were you, but I know that, I can't tell you, and everybody's different levels of risk can be taken. I would be very careful and try your best to stay away from construction, just because even when you get into the procurement of things, it could create problems. Let's see. The term also includes extension of utility lines such as water and electricity from points beyond the confines of the space in which minor remodeling is undertaken. The issue there too is if you're having any electrical work done and it is construction, you also have to do an RFQ to get engineering services done, or an architect, et cetera. So there's a lot of things that have to be done even before you engage in the construction. And so the last bullet point is, I get a lot of these questions and I always have to say, let's get the attorney on the line and let's read through the law. I like to pretend I'm a lawyer, but I'm not a lawyer. But, we need to be careful and find a good conservative lawyer. It's okay if they tell you no. I would prefer to be told no and be safe than that. It's okay to push back. But if it seems weird, I would stay away from it. I will tell you, I won't name the regulatory agency. It's not the Texas Education Agency, but they are looking at procurement and they will be questioning any procurement and requesting very large amounts of reimbursement, especially when it looks like construction. The other issue is if you're using federal funds for a construction project and the contractor helped with the specs, they are disqualified. They cannot bid or submit a proposal, competitive sealed proposal for something that they participated in the specifications for. So be very careful with that. That is forbidden with federal funds, not forbidden in state law, but it is forbidden in federal law. I will say this is where if you look at the middle of the slide, it talks about construction, remodeling, etc. It says it is an allowable activity. You'll get prior approval. However, the LEA is accepting multiple risk in using federal funds for construction. There's risk of future audit findings, and this is coming directly from the FAQ. And the reason for that is you've got to have really good contracts in place for the Davis-Bacon, for the bonding requirements, especially if you're going to be using job order contracts through a cooperative. There's just so many layers of things that have to be dug through in order to do this right. So there's a lot of planning. And then also, can you finish it within the time period that you have these funds available? So on the latest FAQs, this was released last month. Is it an allowable expense to pay teachers who were or would get vaccinated against COVID-19? Yes, a stipend is allowable if you properly documented and proper documentation is, did the board approve it beforehand? So we don't want to be doing it after the fact. Make sure that the board takes action, that it is a good public service to do this, or good public purpose, to do this. And we can all agree that it is to keep the teachers and the students safe. Can LEAs provide a stipend or incentive for staff and students who are vaccinated and ask for proof of vaccination? You can ask for proof, but you need to be careful with the FERPA laws for confidentiality purposes. And this is where we get into the ESSER and ADA discussion. So we've already talked about it. This was before we had all of our calculations, but one of the things, this FAQ, the way it's asked, is the concept of lost revenue. Lost revenue is not really allowable under ESSER funds. It is with the higher ed. So lost revenue indicates that you give me the money and it's based on, revenues that I lost in the past. The only place that we're seeing this is with child nutrition, and I have a slide on that. But the ESSER funds, every time you request a reimbursement, there has to be underlying expenditures that support that reimbursement. So you can't just say, well, I lost ADA and I think that it's X amount, so I'm going to draw down for the lost ADA. That would be lost revenue. You can't do that with your ESSER funds. So just be very careful. So if you sit in industry groups where you have a mix of community colleges, which does happen, and you hear that conversation, be mindful that that is available to higher ed, institutions of higher ed, but not to us through our ESSER funds. This is what I was talking about on your ESSER and TRS. Make sure that you read this carefully. Again, ESSER 1, not subject to the TRS federal contributions. ESSER 2, only the hold harmless piece is not subject to that. And then it also talks about Senate Bill 288, allowing for retirees to be rehired for mitigation of learning loss and not to be subject to the TRS surcharges if they meet the 3 criteria that are listed below. So you might ask, why do I have the giraffes? But it was funny because I was looking for, I like pictures. I like my slides, unfortunately, to be busy, but sometimes just the white backdrop is kind of boring. But when I searched for hold harmless, this is what came out, giraffes among the humans. So I don't know why that's a hold harmless thing, but I thought it was cute. So, initially when the hold harmless discussion and the reduction to ESSER came out, I was struggling, and I asked TASBO, okay, what run ID do I look? How do I even know what's happening? How much is the hold harmless? Because I knew that was going to create an overpayment, but I didn't know how much of it was the hold harmless and what amount was a true overpayment, because that hold harmless amount allowed my clients to book a portion of ESSER 2 within current fiscal year 21. So when you look, and I believe Josh Haney, he was showing this spreadsheet. So I took one of our clients here in the Houston area. And so I wanted to see, well, how does this translate to the summary of finances? So for Aldine ISD, you'll see that the summary of finance run ID 33350 is the ESSER reduction. And so the net allotment of 370.4 million down to the 354 yielded the $16 million in the ESSER reduction. And so when you translate that and look at that in your summary of finances here, you'll see that in the 2/9 September 14, 21 lines, and this is the payment ledger, you'll see that. So the sum, it went from a positive 9.2 to a overpayment of 6.7, and that's because that's $16 million. That's a $16 million swing, and that has to do with the ESSER reduction. So if you're figuring out, well, how do I read the payment ledger with the hold harmless? That's how you would do it. For some of my other clients, it was not exact, but it was pretty close. But for this particular client, it was to the dollar. So the financial statement impact. So my client for Aldine, they would have to show, even though the ESSER reduction was 16 million. So what that means for Aldine ISD is they could recognize up to 16 million of ESSER 2 in the current year, but we'll get to that. For now, I just want us to be mindful for June 30th. You're getting ready to issue. If you haven't already issued for 831s, watch the 916 line item, that's the settle up. So the $7.1 million, $7.2 million is the amount of the overpayment. That should be a liability. So for 630s, you usually net it with that cash receivable. So make every attempt to separate the cash receivable for your July and August payments. For 831s, you won't have this issue because as the year ended, you've received the majority, if not all, of your FSP allotments. But make sure that that you can see, if possible, on the face of the financial statements, this overpayment, because TEA does look for it. And then your check figure is going to be that adjusted allotment for you. For Aldine ISD, they're actually going to show the $7.1 million in overpayment plus the additional $971,000. Now we get into, well, what is this revenue recognition issue, and why are auditors saying, no, you can't claim ESSER 2 if the NOGA wasn't received? So it's basically a timing issue. If you didn't get your NOGA for ESSER 2 by June 30th or August 31st, depending on your year end, then you're limited only to the hold harmless amount for revenue recognition. It does not disqualify any expenditures, because the feedback I got from my clients is like, well, Selena, we had pre-award costs. Of course I can claim it. Yes, you can, but you're going to have to wait to claim reimbursement and revenue in fiscal year 22. Okay, so you can still claim them. It's still counted towards that, and pre-award costs are still valid. Let me move. So period of availability, including pre-award cost period, and revenue recognition are separate issues. So let's go through a quick example. So let's say you're a June 30th year end, your ESSER 2 approved NOGA was received on July 17th, 2021. You had an ESSER 2 allocation of $40 million. your hold harmless amount was $5 million. You had eligible expenditures from July, during fiscal year 21 of $15 million in Fund 199. So what can you recognize in fiscal year 21? You can book only, unfortunately, $5 million as revenues and receivable, and you're going to reclass that from Fund 199, the expenditures, from Fund 199 to 281, and then book the corresponding revenue and receivable in Fund 281. In fiscal year 22, you're like, well, you didn't let me do the full 10 million. That's okay. You can draw down the additional 10 million for those eligible expenditures, but you're going to record the federal reimbursement, that revenue, in 5929 in Fund 199. It goes back to that very first FAQ for ESSER 1, that if the expenditures were incurred in a previous year, when you get the reimbursement, you recognize the reimbursement and the revenue in the fund that originally paid for it. So still same concept here. So then now, you've already claimed $15 million of your ESSER 2 allocation with fiscal year 21 expenditures. Moving forward in fiscal year 22, you have $25 million of ESSER money to spend in Fund 281. So I'm hoping that helps, because it is very confusing on what you can do, but your hold harmless is really your limit if you did not get your NOGA by fiscal year end. If you're an 831 and you've got your NOGA by 831, not that you submitted it, but that you received an approved NOGA, the bottom right stamp date, that's your approved NOGA date. You can go ahead and claim those revenues as of 831 if it's 831 or prior. So last few slides, and I hope I'm okay on time. Maintenance of equity. I'm so glad I found it on Sunday that they did post it. They just issued version 1, which tells us it's going to be a living handbook. So always watch for it, because things do change. Even on the supplement not supplant one year, they snuck in a change I didn't know. So go back to those handbooks periodically to make sure there's any changes. Remember that it's only applicable to ESSER 3, and TEA is going to be looking at this, and your external auditors, for fiscal years 22 and 23. So you're wanting to make sure that LEAs and districts, and then the campuses that serve large populations of low-income students don't experience disproportionate education reduction in funding in those 2 fiscal years that I mentioned. So we're looking at fiscal years 21 to 22. So we don't want a gap in serving these low income students. We want to focus in on those students because they typically will, yes, they're economically disadvantaged, but that equates to educationally disadvantaged as well, right? As we know, those terms are interchangeable, but we want to make sure that these ESSER funds are used for those. So we want to make sure also that those low income student populations or groups, campuses, LEAs, don't receive a decrease in state funding below their fiscal year 2019 level. So the base year is fiscal year 2019. So there are some exceptions. So if you're a really small district and your enrollment is less than 1,000 students, you only operate a single campus, and services to all students happen with each grade span within a single campus, you're exempt from it. You still have to sign a Mo equity certification exemption form and have it on hand. I don't think that you have to put it in there, like submit it to TEA, but and this says TASBO at the bottom here, just because I'm presenting on this November 3rd. So I didn't steal this from any, these are my slides for this, but I am presenting on November 3rd, but I'll take that off for the final item. So make sure that you go back to the Mo equity exemptions and that you click on this handbook slide and read through it. Like I said, very excited about it. The other issue for the emergency operational cost reimbursement program with the child nutrition program, that's new this year, obviously. So there's been some confusion on where do I even report it on the CFA. you have to be careful that you do put it in Fund 240. It is federal funding. You do assign an ALN number. And so there's two spreadsheets on TDA's website. There's two spreadsheets. One is for school lunch program. The other one is for CACFP. And that's a much smaller program. So make sure you include it, because TDA, they will make you reissue your CFA, even if it's just for like $2,000. That happened to us. There's another program also that it's the commodity storage that is federal, and it is CFDA 10560. So if you see that in the comptroller's website and you see additional funding coming from TDA, make sure you put that in as federal. So what we do as auditors, what you can do yourself, is we download that Texas Comptroller's report and we look to see everything that's coming through TDA. I don't worry about TEA because I have the TEA payment report, but the Department of Agriculture doesn't have such a mechanism. So make sure you scrub through that and that you know for sure what is federal, what is state, and that you're properly showing that on your CFA. Okay. Romalda, I am done. Any questions?
There's a message here that says, if district approve a COVID-19 vaccination stipend this summer, as I understand, it cannot be retroactive to date of board approval. Is that correct?
I believe so. I think you have to have anything with stipends, compensation that you're going to do in addition to, it has to be approved prior to actually giving it to the employees. That's very important. And you can also look at TASB. They have rules on that, on compensation, and that gives support, because I know there's superintendents too that say we really want to do this for the employees and they're in a rush to do it, but you need to follow the correct
timeline
steps, for that. Someone else had said that they use Fund 101. Yes, that's correct. So if you are a Provision 2 district in child nutrition, you will use Fund 101. So for those operational cost reimbursement program, you would put that in 101. Just make sure the critical thing is that you designate it as federal, because they're going to be looking for it as federal with those assistance listing numbers.
Selena, there's another question. Our district receive funding under the Emergency Connectivity Fund through E-rate. Do you know the accounting for that?
Let me see. I sent an email to TEA for that. I'm not sure if this is going to be the same. I was reading the Emergency Connectivity Fund FAQ, and it doesn't say if it's federal, and I don't see an ALN. If it doesn't have an ALN, my gut reaction, but don't quote me on this, this may change, that it would be treated as E-rate, similar to, it's still in a 5,900, but it might be reconciled, it won't appear on your CFA, but I'm not sure yet. So let me find out and I will communicate directly with Romalda. I did send a message into TEA and I'll see what they say, but I didn't find anything. I didn't see a new fund code. I didn't see any accounting guidance for that. And I didn't see on the FCC's website where it said that there was an ALN. I'll also check with someone that works with the Government Audit Quality Center at the AICPA to see if they have an ALN. If we have an ALN and we don't have a fund code, I would still say put it in 199, put it in a 5,900. If all else fails, I would say this, put it in 199 like you do your regular E-rate. Sometimes you put it in a 600 fund, but make sure you put it as a 5,900. Then we'll figure out the CFA implications, whether it's a reimbursement program, it's just a reconciling item, or it's actually going to be a federal grant on the CFA. But I'll find out for you all. I didn't get a chance to find out beforehand.
Okay, I don't see anything else posted. Okay, so Selena, earlier you mentioned that the state has been checking districts' websites to ensure compliance with the required postings for ESSER funding. Have those districts that not being compliant, have they received any feedback from TEA do they have like a grace period to remedy the situation, or what's the feedback?
No, it was just the region service centers, Romelda. They haven't heard anything from TEA specifically, but the region service centers have given them like, some are saying, okay, you're way out of compliance. Nothing is correct. But no, nothing directly from TEA, because the audit that's for my client is ESSER 1, so there wasn't anything on there. So nothing yet on fixing. I would say that if you do get feedback, go ahead and fix it. You have to do your return in person plan. You have to it's a living document, and updating it. The use of funds plan, not so much, but still, I think the issue has been not putting those two, and then the accessibility, the translation, making sure that it's in Spanish as well. But nothing yet, Ruma. Then I can find out too from others to see, because there's one in El Paso. One of my clients, they had a preliminary review, and I want to see what recommendations they got, and I can send that back to see if that region service center has gotten any feedback from TEA. Sorry.
Got it. Thank you.